Ladies and gentlemen of the crypto space, we're live on a Wednesday, May 8th at 11:31 a.m. Know thy peers is everything. Different people wanting to do different things, all for their own respective purpose to achieve their goals and expectations. The more you know who you're playing a game with, the better prepared you are to make different choices, do different things. Do you think the people who you're playing against right now will be the same people you're playing against when shit gets crazy? Hell no. You'll be playing with a very different group of people. Right now is the aftermath of January to April, Q1 of 2024. And those folks are gone. And anyone that made big money in memes was likely an astute actor, people that have had experience with that kind of volatility, and they've capitalized and they're gone. Maybe they're going to reap significantly more benefits from the meme sector going forward, and that's just their skill set. That's just their forte. And the people that have lost their money, they're all gone. So right now, the people in the market are investors, long-term investors, people that have a very different mindset. So the exuberance that we experienced in the market in Q1 of 2024 has not been widespread across the broad crypto space, and we haven't had really the start of any cycle from a currency cycle perspective. It's very isolated activity, and I would broadly define what we experienced in crypto markets as a return to the mean, from the downside to the upside. Now, I mean that from the broad crypto market perspective, not from a Bitcoin perspective and not from an isolated asset perspective, because clearly everything in especially Bitcoin and Ethereum in that regard, and Solana, we're all at significant premiums. But from an average perspective, the thing that I like to look at is obviously, and that tells us where the markets are at, not where specific assets are at. Specific assets can clearly be at a premium, but on an average market inspection perspective, it has been a return to the mean. And frankly, that is literally just written all over the charts, and we'll look at the chart. I mean, look, we're starting to get back to basically an average. Let's say, 78, I don't know, whatever it says here. Why does it say 78? We're at 160 bill. Oh, that's back then. Okay, I was looking at the tool tip. So it was probably a little bit above mean. But it's very interesting because what is mean if we don't have too much history of these markets to go on? We literally only have like 2020 and 2021, and everything completely rolled over starting in 2022. And well, we still had actually flatness in the beginning of 2022, but the breadth to the upside collapsed, and there you go. The rollover started in Q2 of 2022. So I would argue all this rounding bottom action is a return to the mean. Anywho, point being, know thy peers. Q1 2024, particular peers. Q2 2024, where we are very different peers. Heading into Q3 and Q4, you're going to have a very different set of people engaging in the market. I want to talk macro, but I also want to get a very important point across. So obviously, as I talk to many people, I see arrows in the house, and obviously many other people. Please hit your comments. I like to respond to comments. As I talk to everyone, especially in Discord, we lock assets, and now is a good time to do things like that. And the title is certainly know thy peers, but look at the clock. Timing. When the market gets to a certain state, an excited state, an exuberant state, don't lock your assets. You don't lock it when shit's going parabolic. You dump it on people that are just trying to figure out what the hell this thing is. Now, unfortunately, that's real. It's important to accept and understand that this game of capitalism, this game of economics that we engage, is yes, a player versus player, but this is a winner take all. This is a one player game. It's a game against yourself to follow your rules and execute um, just rigorously, but it's a game of taking. It's a game of taking from others. Don't lock your assets when the markets are getting exuberant. Now is when you do that. And that is when I express the phrase investment season is over. We have exposed ourselves to markets, real markets, emerging markets, as far as the eye can see. Businesses that are on these markets that are intent and expressing that they are going to expand to more markets. Imagine you buy a business on the New York Stock Exchange and they're growing and expanding to international markets. It's exactly what you just did. It's the exact same thing. Because one chain versus another is relatively an international market. And you got to go cross border to get capital from one market to another. Might be analogous. In hindsight, it might be shown to not be analogous. It might be actually like, oh shit, it really was relatively international. That'll be a fun inspection probably sometime in 2025. And obviously, the further into the future we go, we'll have fun seeing how well these metaphors were probably actual reality. So that was a key thing I wanted to say to folks. Very few people listen to me. I mean, at best, we've had a couple hundred folks when there was a couple of retweets of the stream going live. So you talk about a couple hundred people. So the point being there, the vast majority of people don't hear this message. They get crazy. They're young and exuberant and very unfortunately naive. They don't understand the way the world works. And they're going to lock their assets. Now, in hindsight, maybe folks that locked their assets in like 2021 and 2022, and I've locked a fair amount of assets back then. But I guess the point in that regard is don't make the same mistake twice. So this time, now in 2024, we got the timing right. And we have a rich, robust story of how to engage with this market from the start, thinking in terms of time and behavior that needs to be executed at different times in this very cyclical market. It's real. The cyclicality is real. Don't lock your assets. And frankly, I would argue Buffett has the right perspective. And the expectation is things to fall apart at some point in the future. Maybe when interest rates get cut meaningfully. We've discussed, I mean, I've tweeted, I've posted on X about why interest rate cuts are likely to explode or cause explosions in the market. That's another story. The point is the cyclicality that everyone knows of, and we here try and explain why and how. That's coming. What's the appropriate behavior? It's very contrarian. Accumulate cash on the way up. And then that cash, opportunistically, you could vary the denomination. You could accumulate Bitcoin and Ethereum and Solana and other gas tokens on the way up. And then you could use your Forex skills to swap to the outperforming currency on the way down. For instance, Bitcoin, you sell at the top into a stable coin, and then the dollar starts to outperform the shit out of Bitcoin. So the point being, you're accumulating cash on the way up. You're not investing. You're not investing. Cash isn't an investment. be aware that you need to do work to manage your cash if you're not dollar denominated. So if you intend on outperforming in your cash position, you will have work to do, inspecting the market, trying to know where top is. The accumulation of cash on the way up allows you to engage with the market when it explodes, to do what Buffett does, execute hostile takeovers, broadly acquire discounted businesses that are selling for pennies on the dollar. So you're now well prepared for 2026. Maybe things stabilize in 2027, but when things look cheap and you have the hindsight of 2024, 2023 bottoming process of what is a real business, now you won't hesitate to buy more businesses at discounted prices, and such businesses that are established, have revenue, have exposure, and have expanded across many markets. So they have reach. Total addressable market type statement comes to mind. So we know what to buy when things are at a discount. What's at a discount? It's over. It's over. Investment season is over. Next up, after however long it takes, the patience for macro folks to figure shit out, is exuberant season. So we have rules of operation, and I hope these types of conversations help for how to execute and not scramble, and be prepared, know what to do, and more or less when to do it. So macro is critical right about now to try and keep comfort, to allow you to get a sense of where we are. So clearly I'm looking at the Bitcoin chart, so that's really irrelevant with regard to macro. Bitcoin is a lagging indicator with regard to where things are and what things are going to do. If you want to get a sense of where Bitcoin's heading, you want to look at leading indicators. Couple of tweets that I posted earlier. Nope. Yeah, well, this is very interesting. Grayscale. Grayscale's big. And clearly we have exposure to the right markets. Clearly mainnet is massive. And Arbitrum 1 is big. And Base is big. And Optimism is big. Oh, lo and behold, why are they following Mantle? That's pretty interesting. Interesting that they mentioned Blast. I don't know why. But Op Mainnet, Mantle, Base, come on. This is very interesting that Grayscale is looking at these particular networks. Obviously, Mantle has been lagging, but what's expected from a microscopic market? It's going to be extremely volatile. So I'm quite disappointed. Maybe could have acquired exposure to that market a little bit cheaper, but it is what it is. Check back in when market is exuberant, and I'm sure it's going to be just fine heading into 26 and 27. Look at that. My mind's already thinking about 26, 27, and then we get exuberant again in 2028. We already know what's going to happen. We know what's going to happen this cycle. The question is the path. When? But when is irrelevant? Because it's coming. Because if it doesn't come, you're going to be talking to him more than Joe. So, wait, let's go back to the tweets. To Treach. Fractal's obviously booming. We have full exposure to that. Fractal's it's a hot market. That's exciting. So it's all about Japan, in my opinion. I think they've been able to stabilize the domestic commercial banks to somehow absorb this commercial real estate apocalypse. And they already have, we've already seen the foreshadow of the procedures. Big banks absorb the small banks. FDIC does whatever the hell it does. And government reloads the FDIC and they sweep it under the rug the best they can. So we already have the procedure that they have executed. Therefore, they would execute that same procedure again. And that increases liquidity in the system, and bam, there goes the market, just like March of 2023. Boom, pop, everything got hot. So that is literally what we would see again. But the gorilla in the room, the big story is really Japan, because Japan intervened last week twice, and their currency is just they're back to where they started this week. So in 1 week time, however many tens of billions of dollars they unloaded to buy the yen just got completely washed out of the market. So there's only one solution. The question is not if, but when. The U.S. government needs Japan to finance U.S. fiscal policy, and they do that by Japan buying our debt. Clearly, the whole world buys our debt, but Japan is a key actor, and they're a core ally. And frankly, right now, with this particular situation, they're kind of forced into the position of being like a very explicit sterilizer. It's like, Japan, guys, you want to survive, you're going to take a swap facility. You're going to print however much freaking, JGBs, Japanese government bonds, however much debt you want. You post it as collateral into the standing swap facility. We're going to give you dollars. You got to buy your yen. You got to stabilize your currency. So literally, that's unlimited because they can print however much debt they want. It's not. They no longer need to do yield curve control. They don't need to print the yen to purchase their own debt. They can literally just chuck their debt, which they print out of thin air, into the standing swap facility. They can have as many dollars as they want, so they literally have complete control over the yen. I mean, come on. How else does this? How else does it work going forward? There's how, Japan can't cease to exist. It's a critical ally in the region. It's a meaningful country, wonderful culture, and this is how it has to work. Unless the Fed wants to reduce interest rates to 0.1% again, oh my God, they're not going to do that. That's not on the table. That's not in the cards. Everything they've said says they're not going back down. If anything, they're going up. They go down 0.25%, 0.5%, because frankly, if they don't go down, what the hell? The real estate's frozen. It's going to continue to be frozen. It's just going to be a catastrophe if they don't cut marginally. Politically, political are shot if they don't cut at some point. And they'll be forced to cut like 0.25% to say they cut 0.5%, to say they gave it a good shot. And that was the interest rate cycle of 2024 and 2025. And things are going to get probably still complicated. But the end of all these complicated stories is papering over the cracks, whatever metaphor you want to ascribe to the behavior of increasing liquidity, or however the hell you want to describe the liquidity. It's the alleviation of a systemic instability, the alleviation of volatility. If a bank goes bankrupt, they're insolvent, and they need to sell their balance sheet, that's a lot of sell pressure. It's a lot of ask pressure for people to bid their assets. And that's what increases the volatility. So anytime you disrupt volatility, you're stabilizing the system. And now people, as I've discussed very explicitly, when you have cash and there's a huge amount of cash available and it's sitting there and it's calm, you're like, oh shit, what am I going to do with my cash? All right, I'm going to do a carry trade. Oh, I'm going to buy something. So cash, bored cash gets spent. Have you guys seen how much money's in money markets? And that's really how the cycles start. And that's separate and apart from the pretty much baked into the cake requirement to expand the system. As everyone said, it's a debt-based system, so if the debt's not expanding, the system fails. If the debt ever gets repaid, you end up getting a cascade effect. And the whole thing, the whole house of cards starts to crumble. So that's really at the global currency composition level. It has to expand. How does that expand? U.S. government debt. U.S. government debt expands, and there goes the global currency supply, because that's how we've described the Eurodollar system. That has to expand. It will expand because that's the mechanics. They print the debt. The debt is used to print dollars. Money is debt. Dollars are currency printed using money. That's the way the system works. Hate it all you want. It's irrelevant. It's the mechanics of the system. You could love alternatives all you want. But unless you understand those simple principles, you don't know what's going to come next. Well, you don't even have a sense of what's going to come next, because the things that you're about to want to experience in these markets are a result of those very established mechanics. It's almost like, I don't even define U.S. government debt as money. It just, that is what it is. It is the money in the system, and the banks accept it as collateral to facilitate the printing of dollars in the system. Period. Cut through the bullshit, cut through the noise. That's how it works. So understanding those mechanics, if they're going to, if we consider their deficit spending, we consider the refinancing required this year for the U.S. government, we understand that the global currency supply is going to balloon soon. Sometime in the future, in the short term, the cyclical future, this 4-year cycle everyone keeps ascribing to the Bitcoin halving cycle. No, it's the global currency supply cycle. And how do we know that the global currency supply is expanding? Yeah, you're about to find out. You're about to see what happens when the global currency supply expands. When? Soon. Q3, Q4, Q1, Q2. I'll give you a 1-year time span because it doesn't matter. Because that's what's coming. You'll see. Topsy's in the house. What's up? Early birds. Arrow, good morning. Trantaloy, good morning. I am DC. Happy Wednesday. H-Mac in the house. Good morning. Robert, your Twitter was on fire yesterday. Yeah, I was angry. I was frustrated. My contractor of 2 years up and left. Basically an employee of sorts. So that kind of got me all fired up, baby. And, I was just, but that's the thing. I'm always angry. Isn't that the reference from that Marvel reference? When Bruce was, that's his secret in the Avengers. He's always angry. I'm always angry. Just because you're angry doesn't mean you need to be angry. Understand it. Understand that there's great reason to be angry. It doesn't mean you have to express it in certain ways. And that's just anyway. That was my sentiment yesterday. I was angry, very angry. Arrow Noah woke up and chose violence. Yeah, there was a lot of tweets yesterday here. Oh man, it's fun topics. Because this is my life a couple of years back. 401k. What the hell is a 401k? You ain't retired for shit on a 401k. You ain't going nowhere. Retire. Frankly, retirement is an interesting topic. You think there was retirement in the 1800s? I think there was great pension plans and ways to, I'm going to live out my glory years in the 60s, 70s, and 80s, not working. In the 1800s, you didn't live to 40. All this shit that they created in the 1900s, man, messed up the brains of human beings, messed up their expectations, the expectations of retirement. Retirement isn't normal nor natural. No, Darwin never said anything about retirement. So you think a 401k is going to give you retirement? Oh, they baked it into the system. They made the system so you cannot work when you're old. No. You don't stop trusting anyone. Don't trust anyone. Trust yourself. Only yourself. You're only dependent and accountable to yourself and your interests. And, you could argue that it is the case that my interests are firmly myself and my family. So if I'm good to myself, I'm good to my family. On Rand stuff, virtuous selfishness. My selfishness. Anyway, you could get philosophical and shit with that all you want. So you're accountable to yourself. You are responsible for your future. And if you think chucking a portion of your salary into a 401k is responsible, it's probably the most irresponsible thing a person could do, because you are leaving someone else accountable for your future, especially Social Security. It's literally, you can't do anything. You'll never, nothing about it works. You will not get what you put in mathematically. And it takes the next generation. Oh my God, if it takes the next generation to fund your 401k, to prop it up with passive flows, or to fund the Social Security, how well equipped do you think the next generation is on average? Obviously, I think my kids are geniuses. Beautiful little angels they are. But on average, with the complete obliteration of the middle class, it's just gone. Like 175K to be middle class nowadays on average in America. In housing standards, housing prices. With the destruction of the middle class, how well equipped do you think they are to fund your retirement? Because if you understand mechanically, that's what's required to fund your retirement, the next generation. Demographic collapse. 0% population growth in 2023. Oh my God. So please do yourself a favor and take responsibility and stop thinking a 401k is going to do anything productive for you in the future. I mean, look, there you go. This is your next generation, 62K, and well, that's me, actually. I'm the oldest of the millennials. 62K in savings. And they're 401k. Exhibit A fucked. It's horrible. It's scary, and it's sad, and it's unfortunate, and it's emotional. I get emotional, and I get angry. Look at the tweets. You are responsible for yourself, and if you choose so, your family, and that goes into morals, and if you're a good person and stuff like that, and your conversation with God and whatnot, however you feel about those particular topics. You're only capable of handling what you can handle, and you don't delegate shit to anyone else. I absolutely love this GIF cartoon. It's hilarious, absolutely hilarious. Go to college, they say. I made it to the top of the pay scale in software engineering in New York City, and you know what I was? I was fucked. Oh my God, that was back in like 1817, pretty much 1817, give or take. Oh, I just kept going, didn't I? That commencement speech, for us that look at the crypto space, we are few, and on average, the people at that commencement speech are fucked. Pardon the language for anyone listening with kids, but man, I get angry. The kids, they were all responding with booing. The herd, the general population of that commencement speech, the average will never get anywhere. Anywhere. On average, you will not meet expectations. It's the few that excel. It's the people that think differently. And where was that one tweet? One more tweet and I'll get off this topic. The spoon-fed system. The fall-in-liners, the bandwagoners, the never had an original thought in their head will never, ever, ever get anywhere. It's not the way the system is. That's just literally Darwin. It's nature. It's organic. It's real. It is what it is. Adam, good day to all our wonderful peers. Yes, us peers, 146 of us. We've had bigger numbers at times. But it's the few. It's the rational few. love humanity. I went to school for electrical engineering. I would love, and I still appreciate that sentiment, that naive sentiment that I had in college that I could make a difference in the world. That's why I went to school for electrical engineering, because I wanted to build things. Engineers build things that change the world. So I have an appreciation for our peers, but as I've gotten older, I've also become a realist. Most of our peers are idiots. I'm sorry. I'm sorry. Come on. Come on. Come on. Give me a little slack. Is that not true? It's not true. Wonderful. They're good people. And I'm a humanitarian. Kids mean everything. Kids are innocent in everything. Everything. Irrespective of anything I've ever said about a dumbass adult. It's all irrelevant when talking about kids. Kids are a blank slate, and they are our future, and they mean everything. Our wonderful peers, excluding kids, because kids are everything. Good morning, Adam. How do you balance the idea of not locking assets with accumulating VE33 positions in size if and when they come into a deep discount zone? So when the market gets hot, you will not have any discounts, period. Things will be up, 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 and then they will go up, 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 and up, and then they will go up beyond anyone's expectations. And then everyone will be like, holy fuck, it's a new world, everything's changing. That's what's coming. So it's the original point earlier in the stream. Feel welcome to Compound now. That's cool. Believe me, I'm gonna remove from the routers. What is it? What's it called? Solidly the relays. Marrying that, taking it out. It's all cash, 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 cash. It all goes to cash when things start to go parabolic. Compound all you want now. On the way up, cash. And obviously, pick your cash denomination accordingly and how much work you want to do. Cash, 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 cash. On the way up is cash. And then you Buffett. That's what Buffett's doing. Look at how much cash he has. Why do you think he's doing that? Because the boy hasn't had a discount in 15 years. What, $190 billion in cash? It's exactly what we talk about. It's accumulating cash, and it's been a bull market. It's just straight up bull market. Here we go. NASDAQ. Let's go out to the yearly. Exhibit B, bull market. Whole thing straight up. So he's waiting for some shit to really break. When you get a mean regression on the NASDAQ to the time-weighted average price on the yearly, 187, a 75% retrace. What do you think Buffett's going to do in that scenario? Boy, he's going to be buying everything. $189 billion worth of everything. You think at the time-weighted average price in the yearly for the NASDAQ, I bet you that savings account will have $5 billion in it. He'll unload 185 of the $190 billion. Boy has the patience of a saint and the mental fortitude to rigorously execute. And I will engage exactly like that. And I will never, ever in my life achieve anything like he has achieved, but that's irrelevant. What I've identified is that the way he thinks is the right way to think. It's the rational way to think. Accumulate cash on the way up and buy everything when the goddamn tornado comes through town. Because the system will continue. And that's what he does. Kingdom asset prices are on the way down rather than on the way up. Thoughts on putting weekly revenue back into the business until prices definitively reverse. Yeah, dude, we're not there yet. We're not there. Japan's still trying to get their standing swap facility. The standing swap facility. So we're not there yet. So look, I got my stuff in the Velodrome relays, marionetting. Compound all you want. You know, obviously, if you need cash and you need to finance expenses, you know, manage the business accordingly. But now is still the time to discounts. If you still define a price point as a discount, that's okay. But I'm sure, considering this conversation and what we've been talking about for all these months, years, frankly, you'll know when it's no longer a discount, and you'll know. So define it for yourself. You have on your calendar or voice notes a reminder. Make the statement, plant the flag when it's no longer a discount, and then stop. Cash on the way up. Sell, 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 sell on the way up. Sell. Claim, 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 cash, cash, cash. And then you just grow your cash pile. That's what Buffett does. Buffett the market. Hope that helps. DeFi dope. Hey, Cap. Is this how dollar go up breaks down? People print dollars when borrowing them. Um, Two, interest means dollars owed, so dollars printed, so debtors must sell something to get those extra dollars. Well, borrowing dollars in the way the system is structured with the commercial banks, and that's global, creates dollars. Yes, true. Two, interest means dollars owed. Interest means the borrowed dollars that were created need to be put to work to be productive. So literally, it's a carry trade. Everything's a damn carry. You're literally borrowing at 5%. You need to have a productive business that generates more than 5%. And it's a carry. Everything literally is a carry trade. It's really strange when you reduce everything to its fundamental um, uh, components. Sure, interest means dollars owed, of course. You need to service the carry trade. So debtor must sell something to get those extra dollars. Yeah, but in the real economy, the financial economy, the real economy, they're doing some sort of business activity and generating greater than the debt servicing cost. And frankly, in the real economy, on average, for the majority, that debt's never repaid. 5%, you just refinance at 5.5, 6. And frankly, that's why the world's a different place. The world is a completely different place in this environment. Zoom out to the 12-month on the 10-year government bond. Interest rates are no longer just going down. But look at that. Almost 2 years stopped out on whatever the hell moving average that is. 100 SMA. 100 SMA in the yearly for the 10-year bonds. The rates will come down cyclically. Watch. Shit hits the fan, and we get the 3%, and you're like, oh, smack right into moving averages. Because in the end, it kind of all does make sense. Right into the 200 SMA on the 6-month chart. And watch, it falls down to the 50 SMA, 3.29 cents, 3.29%. And you're like, all right, there you go. There's your cyclical decline, except now, higher highs, higher lows. So let's turn off Fed funds. So in a lower highs, lower lows interest rate environment, you never pay back anything. You borrow at 5% and you're making 10% of your money with your businesses. You refinance your 5% for 4%, for 3%, for 2%, for 1%. You're just always refinancing. And top it all off, because you refinance, you're paying less on the monthly. You owe $1 million a month at 5%, you owe 900, 800, 700. Literally, your monthly expense on the original debt gets less and less and less. So that's why this is a different world. Higher interest rates means you're refinancing, and instead of paying $1 million, you're paying $1.1 million, $1.2 million, $1.3 million. But the thing is, you got to check back in 5 years, 10 years, 15 years, 20 years, because that's how long. You got to look back on average. What's the refinancing cycle? So as Raoul Pal talks about, it's all about refinancing, and that's kicking the can. And it turns out that the biggest of companies, corporations in the United States, have all this long-term debt at very, very low rates. So it'll be some years before they have to refinance at a higher rate. So if that's in 4 years from now, 5 years, 10 years from now, you got a fair amount of time for this system that everyone hates. Everyone loves to complain about and say that BRICS is going to take over the world. Yeah, when? Uh, Brent Johnson says the only way any other currency comes into the picture is after all the debt is repaid. I mean, doesn't that kind of make sense? How do you start using something else if you owe someone a shitload of dollars? Hope that helps. And that any dollar weakness is just temporary. Yes, that is true. When the net printing of dollars overwhelms the above structural long-term dollar shortage. Dollar weakness is always temporary because the amount of dollar demand is always going up. Everyone has borrowed around the world. They've organically opted in to borrowing in dollars. The amount of global dollar-denominated debt is pretty much all the debt on the planet. And therefore, you need to make money in dollars in order to pay the interest on your dollar-denominated debt. So, the only way to pay the interest on the debt is to borrow more to expand your business, to make more nominally, not inflation adjusted, because all debt is nominal. It doesn't adjust for inflation. Interest rates are just a number based on the amount of capital borrowed and the principal and whatnot. Yeah, so dollar up unless you get you get the standing swap line, the standing swap facility. There's no other way this works, and that's exactly what happened. You've heard the swap lines before. They broke them out during various times in the last 15 years. But now you're going to get standing swap line facilities, because otherwise the yen go bye-bye. And Japan have Immortan Joe in Japanese. That's it. So you either get, I always like to say, you're either getting healthier or unhealthier. You're getting better or worse. You're either getting fatter or skinnier. There's no such thing as flat. No such thing as standing still in anything. And that's a fundamental property of nature. So, how do you cure yen depreciation when the carry trade says everyone's going to sell yen for dollars? Yen's at 0 to 0.1% and dollars at 5 to 5.5%. Oh my God. So the only cure is to have a swap line. And oh my, if the dollar goes down, which it should, because a good portion, if not almost 50% of the DXY is yen, other parts euro, and the remainder. That's a way to get the dollar down. And if you get the dollar down in yen terms, boom, 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 cascades over to the other currencies as well. And there you go. If everything is cheaper, if dollars are cheaper in terms of other currencies, there goes the purchasing power of other currencies, and all of a sudden, everyone's currency around the world starts its cyclical appreciation. There's your expansion of the global economy. And that plays into this mythical bull market that everyone talks about, the cyclical bull market, which is really the global currency expansion cycle. Adam, my man, are there any specific triggers, catalysts, before we get exponential increase in dollar liquidity in crypto to get us from 160 bill to 1 trill, or is this just trust and lendiness in these systems? Well, lendiness means everything, because lendiness over time, trust is built, so trust and lendiness are kind of the same thing. So 160 bill to 1 trill is a manifestation of the trend we've seen. What has taken us to 160 bill? The amount of currency supply in the global economy and the amount of trust in the system that has allowed a portion of that global currency supply to flow into these systems. So what happens in the future, likely the near future? Global currency supply significantly increases. What does currency do? It chases gains. It chases productivity, return on capital, carry trade, so on and so forth. So if you significantly increase the global currency supply, because that's how the system works, and we have all this now trust in the system that has been established through 22 and 23, by meaning the things that have survived. That's the biggest thing that produces trust. There's your capital flows. So I don't know about a trail, but the point is up. The amount of currency will flow. It will flow in and not out, which by definition is monetization. So monetization is a bit of a siphon. Any capital flows in, things go up in price. Things go up in price, draws in other capital. Capital moves from underperformance to outperformance. And what is the most outperforming sector or market of markets on the planet? The crypto space. It's gonna draw in the capital. Hope that helps. HMAC Hulk Smash checking in. Athletic Concept. Gen Z won't be able to save a dime for anything the way we progressing. Facts. Troy. It's odd that people are waiting for interest rates to drop to get bullish. Not me. Listen, they drop interest rates and it could flood the housing market with inventory. You drop interest rates too much, and all of a sudden the 100,000 million billion people in the U.S. they're like, I'm not selling my home because I got 2% interest rate. I'm not going to get a mortgage at 8%. You drop it enough, they're like, all right, fine, I'll get a 6% mortgage. So there you go. There goes the inventory. So that's the mechanism for if they drop interest rates, they blow up the housing market. Isn't that an interesting mechanic, right? Listen to that statement again if you didn't follow that sequence of events. So I don't know. I don't subscribe to that. Fed doesn't mean much. They're a lagging indicator. They're literally responding to the macroeconomic data that we're looking at. So what is that? Maybe the majority, and what have literally rewind the stream. What do we think about the majority here, folks? Don't listen to the majority. That's how you end up fucked. It's a good observation, though. And we aren't people in here. Clearly people, but we're not those people. I am DC. Check out a recent Lynn Alden tweet on Buffett's cash position. She argues that it's not large relative to his overall portfolio and business composition. It's a meaningful take, of course. Insurance business, he needs a huge amount of potential liquidity. And liquidity isn't just liquidity to service business operations, it's also liquidity to purchase acquisitions, to buy businesses. Optionality. That's all nominal. It's inflation adjusted bank account. You know what insurance premiums are nowadays? Oh my. So he's making more cash. So if you inspect that relative to the value of his businesses, all right, fine. So that's cool. To say that it's a relatively reasonable bank account size, that's cool, but that's besides the point. He has access to X amount of capital in nominal terms or inflation adjusted terms. Gosh, boatload of cash. That boy has options. Meme investor, good morning. Have you seen the convex asymmetry thing? 40% APO recleaver, I think it is. Yeah, it's big stuff. Recycler of a recycler of a recycler. Check back in 2028 and we're going to see 40 of those bad boys. We're going to see. Let's go get. That's what I've seen for a long time. So it takes time, and then you got the asymmetry, then you got the B symmetry, then you got the C symmetry, D, E, F. It keeps on going. Because that's what the countries did, that's what the nation states did, and that's what we've started to do in crypto. Therefore, it's going to get weird. I think I've been saying that for a fair amount of time. And the recyclers of the recyclers of the recyclers. And before you know it, it just gets weird. So I think that's a good statement. Asymmetry, great. I don't have no need. My general perspective is that's my expectation. If the recyclers are coming online and they're going to recycle the recyclers of the recyclers, I just need to own the base layer and let everyone else do the work and time. Let time do the work. Because it's coming, ladies and gentlemen. Because they need a standing swap facility. Be an interesting statement. Standing reverse repo facility. Standing repo facility. Standing Japanese swap facility. Standing yen swap facility. Listen, you'll hear the headlines and they'll make it like it's normal or just not weird or something structurally meaningful, and it's because it will be structurally meaningful. So when you hear it, the swap facility or standing swap facility is coming online, you're like, oh, we saw that coming. How else do they get this thing under control? By the way, oil's at 78 and 83. That's cool. I was all heading in an interesting direction. Look at the volatility. VIX is literally flat today at 0. You can't make this up. The suppression of volatility, 13.22 on the VIX. Wow. Absolutely wild. And bam, minus 1.95% on the national financial conditions. We had some tightening last week, and then bam, flat. So we went from tightening to flat and marginally down. They're literally managing. They are managing the currency. It's done. There's nothing organic left. Any tightening and they loosen because otherwise nothing works. And then Immortan Joe becomes the politician of choice. It's the end. Doesn't mean it's the end is near. It's just there's a lot between, Mad Max and Publix down the road, your favorite supermarket, because that's the intent, that's the expectation, that's the normalcy, status quo. That's what everyone will protect, and they will do what they need to protect it, and that's what we inspect. How do they protect the status quo to avoid the post-apocalyptic scenario? What mechanisms do they implement or execute? And that's what we look at. And these are the results. These are the effects of those the executions, loosening of conditions, suppression of volatility, and how to keep one of the largest United States sterilizers online heading into a 10.8 plus deficit spending trill refinancing cycle. Sure as hell need a sterilizer. China's not doing it. No one else can. Japan is everything. This is everything. There's no one left that can handle this kind of U.S. Or emissions, crypto term, emissions from the United States Treasury. Someone has to sterilize it. Simple as that. Is it really as simple as that? I like to think so. Thank you, everyone. Wednesday, May 8th at 12:24 p.m. 185 people made it to the end of the stream. I appreciate each and every one of you. Tell everyone to subscribe. YouTube. I like X better nowadays. That's a better place for media, isn't it? So I wish you all a good one. Stay rational, and we'll do a recap at the end of the week on Friday. I will see you then. Peace.